So we need to know cost accounting and standard costing, then marginal costing. Three topics are left out today. Okay. So that only we will cover. So first we'll start with cost accounting. Okay. Screen is visible. We have discussed in the last class that how many branches of accounting we were having. I have told you, right? How many branches we have got? Hmm? Branches of accounting. LMR you have made him, may have you, I told you to make it of it. Three branches of accounting, which are those? Yes. Okay. So now we are studying the cost accounting branch. Okay. So what do you mean by cost accounting? Cost accounting is nothing but, see, to fix a selling price, we need to know what is the cost. Yes or no? So what we do that is, in cost accounting, what we usually do is, we'll prepare a cost sheet. Okay. After preparing a cost sheet, we'll keep the selling, we will keep the profit, how much we need to make it. Okay. There is a profit margin. Then together, we will put it, we call it as uh, total cost. Total cost plus profit is equal to selling price. Okay. In how the cost sheet will be prepared, the cost sheet will be prepared like this, how it is on the screen now. We'll take all the materials first, raw materials, everything. Okay. Then labors, who are working in that manufacturing unit. And direct expenses. Direct expenses is nothing but here related to the manufacturing, what all the expenses we have got, that we will take it out. Okay. So put all these three together, direct material, direct labor, and direct expenses, put together, we will get prime cost. Is it okay? Hmm? Then we will add factory overhead. In factory overhead, what all the things will be there? Rent, electricity, power, water, all the rest related to factory items. Okay. Factory overhead. Then we will add office overhead, that manager salary, printing, stationery, everything will add it here, electricity, everything will be added here. Then selling and distribution overhead, we will add it, salesman salary, dealer's commission, everything, this also we will add it to the, after adding this all overhead, the total amount what we get is total cost. For this total cost, you will add your profit margin and then you'll fix your selling price. Any doubt in this now, cost sheet? No. So this is how the cost sheet is prepared to fix a selling price and to know the cost also, because sometime what will happen, the cost will be more and you'll add your profit margin, the selling price will go up, and when you go to the market for selling it, the price of the same commodity is less in the market. So what will happen there? People will buy your product or they'll not buy your product. Similar product is available at 20 rupees. You are selling at 22 rupees. People will buy which product? Your product are 20 less than your
20 rupees
rate.
profit.
Yeah. So you should be careful while controlling the cost also. That day I told you, right? Controlling the cost. So you should use any of the method what I have taught you in the last class to control the cost and to add a profit and to fix a selling price. Okay. Three equations are there. You just make a note in LMR this one. Sales is equal to cost plus profit. Profit is equal to sales minus cost, and cost is equal to sales minus profit. Okay. These three equations you make a note in LMR. Okay. Then shall we proceed? So now here we take one example. Okay. How we are going to fix the selling price? Okay. Sales price is equal to cost plus profit. We are talking about that. Okay. You want to fix a you have incurred. First we'll take this equation. Okay. Mm, Sales price, we need to fix it. Okay. In sales price, usually what happens is sales price is equal to cost you have incurred 18 rupees and profit margin you need to keep it as 5 rupees. 5 or 6. We'll make it 2 rupees. What is the selling price? 20 rupees. This is one example. Suppose if you focus only on reduction of cost, okay, I don't want to spend, I want to avoid the wastages, I want to avoid the idle time of the people, employees, wages. Okay. If this is a case of yours, you are reducing the cost actually. If you reduce the cost to 16, okay, and profit, how much selling price is how much? 20 rupees. Okay. How much profit you'll make now in this case? So, which is better technique? To control the cost is a better technique, or to leave not to control the cost, that is a technique. Much important. Okay. So, here for this technique, we call one method actually. We call it as target costing. What we call it as? Target costing. The target costing is nothing but here you are targeting only on cost to keep it less. When you keep less the cost, the profit will be automatically more or increased. Okay. So meaning of accounting is there here, cost accounting. This file, I'll just put it to you in the group. Actually, you can just take it. Okay. Cost accounting is a reporting and analysis of company's cost structure. So what do you mean by cost accounting? It is reporting and analysis of what? Company's cost structure. Okay. Where and all we are allocating the cost, what and all the cost have been incurred, how much the cost has been incurred. It is talking about that value, cost accounting. Okay. Definition is given by so many people here actually. The main objective of cost accounting is to what? To ascertain cost per unit. To ascertain what? Cost per unit. Okay. Next, to correct analyze the both cost and the process and operation cost. Okay. What is the cost of product operation and what is the cost of processing it? So that you should know properly. Okay. And you should, and you will be, if you prepare a cost statement, you will come to know cost accounting, where the material is wasted, time is wasted, and other expenses are incurred. Okay. These three things you will come to know when you prepare a cost accounting. Okay. When material consumptions are more and the output is less, then you will easily make out that somewhere the material has been wasted. Okay. So like that, you will come to know wastage of the things. And it helps in fixing the price of product. I told you clearly, selling price is equal to cost plus profit. So it will help to fix the price. And it will tell you how much profit you can make. Because you know very well, right? How much I can keep the selling price according to the market. So you can easily make out how much I can make profit in this. Okay. As it is telling you the stock, wastage of material, definitely you'll go for what? Controlling it, right? Yes or no? So this cost accounting will help you to control of stock of raw material. Okay. And present and interpret data for management. This will help you this will help for management in planning and decision making. Planning and decision making and control. Okay. Why means if the product is not giving you that much profit, they have to take a decision of closing off it, or they have to plan something, okay, how to control the cost, and they have to take the decision based on the cost sheet. Okay. So this cost sheet help in planning and decision making for management, and this help in preparing budget also. You know how much is the cost of your product, then easily we can prepare the budget of our company. Okay. And this will help us a aid for management for incentive bonus plan for the people for cost savings. Okay. We have got different various types of plans actually for this. Okay. Like if you are like you'll give like this to the you'll tell to the people like this to the workers like this. If you reduce the cost, you will be paid bonus. You'll be given incentives. Okay. Then the people what they do, they try to avoid the wastages. They try to work more. in the company, and they try to reduce the cost of the company. That all will happen with the help of cost sheet. Okay. And our reduction programs also we should help, we should organize, we should tell to the people who are working in the company how to reduce the cost. Because main thing is, if you reduce the cost, then everything is good. If you don't reduce the cost, then everything is spoiling only. Okay. Any doubt in this now? Fine. Next, we have got scope of costing. Again, you can write the same time here, same thing here also. It will help in fixing the prices and it will reduce the wastages and eliminate the production. Inventory management, how to manage the stock in the company. It will help you to compare the actual cost and standard cost in the company, and it will tell you what is the target costing. I told you, no, target costing, we have to use it. Karke. These are the various scope of accounting, that is cost accounting. Any doubt in this now? So element of cost, I have told you, right? Direct material, direct labor, direct expenses. So this is what the meaning they have given. Direct material is what? It represents the raw material goods necessary for producing a manufacturing a product. Okay, it is necessary, required material to produce a product. That is direct. Without that, we can't do only. Example, milk is a direct material for of ghee. So without milk, you can't manufacture ghee, even butter, even cheese. Okay. So milk will become a direct product for the manufacturing of ghee. Okay. Indirect material, it refers to the material which is required to produce a product, but it is not directly identifiable. Example, the use of nails to make a table. So if you want to make a table or you are making a table, okay, the main raw material will be our wood. Without wood, we can't make a table. Nails, what we use to make it, that will become indirect material. Okay, any doubt in this now? Direct and indirect. It refers to the amount which paid to the workers for directly engaging in the production of goods. They are called indirect labors. Indirect labor, it represents the amount paid to workers who are indirectly engaging in the production of goods. Okay. This both will vary sometime actually. Okay. Direct expenses directly involved in the manufacturing of the product. Indirect expenses like manager salary, electricity bill, these all are our indirect expenses. Overhead, I told you, right? Fact of production overhead, factory overhead. Then you have got selling and distribution overhead and administrative overhead. This all are that head only. Factory, administration, selling, distribution, all are these overheads of the cost account. Okay. All this put together only, we will call it as cost sheet. Okay. Any doubt in this now? Cost sheet? This batch costing and all that we have done already. Any problem in this cost accounting? Hmm? Done with this?
Yes, sir.
Okay. Then we'll move on to the another area, that is our standard costing. Okay. I'll share the file to you. Standard costing. Okay. This is one of the technique of the cost accounting, standard costing. Screen is visible to you people, right? Okay, fine. So here, what does it says is, standard means we will keep something, like for example, we will keep some target or some standard to achieve. Yes or no? Standard costing is nothing but, I'll give you one example. Okay. We all are working in one factory. Okay. Our manager have come and told that every person have to manufacture minimum 5 products in a day. How many products we need to manufacture in a day? And that has been predetermined. Predetermined is means what? Before only they have calculated, they have ascertained, and they have telling to us. Yes or no? Yes. And that 5 product will be our target production. You have to prepare, we have to manufacture 5 units, then well, you are going out of the company. Okay. When someone is setting this kind of standards to you, you have to achieve that target, you have to achieve that things what we have told to you, predetermined, before early, then it is called as standard. You have fixed some standard. Okay. Like that only, in standard costing, what we are going to do is, for manufacturing a product, we need to spend some money. That is nothing but cost. That cost what we are going to spend, it is predetermined by the owner, that is by the manager, and he'll tell you within this 10 rupees only you have to manufacture. We will not spend more than this 10 rupees. Within 10 you have to do your production. So when they're telling about the money, then it is called as standard costing. Is it clear? Any doubt in this now? Hmm? To manufacture that 5 product, we need, you have to use only 1 kg of raw material. That will become standard material. Correct? No? Yes or no? So that is this standard is applicable for material cost, direct labor. This many hours only you have to take to manufacture that 5 units. Like example, 5 units, standard units to be output is 5 units, whereas material is 1 kg. Time is 5 hours. So 5 hours, 1 kg and 5 product. When we are setting these 3 drivers, we call it as standard costing. That only here is there. See formula how it is there. Standard cost is equal to material cost. We have to involve in this material cost also. We have to take into this account labor also. How many hours of labor is required to manufacture? I told you example, 5 hours. And manufacturing overhead. What is the other things which is needed to the manufacturer? When we are setting this target or when we are setting this standard, now and we are telling that nobody should cross this, then we call it as standard costing. Okay. Any doubt in this now? Standard costing. So we have got types of standard. First is ideal standard. Ideal standard is nothing but it is perfect standard, okay, or a perfection standard, and we are telling that maximum efficiency level will be this much only. Okay, if it is going down, then we will say that it is unplanned work. Okay, that one ideal standard. Basic standard is nothing but we have got some sort of, we are trying for the first time. Okay, that is basic standard. Currently standard is nothing but we are focusing on current situation, performance attainable by a employee. That kind of standard we call it as currently attainable standards. Okay, so these are the 3 standards are there in making a standard costing more effectively, more efficiently, and the output also should be very correct and good. So we follow these 3 standards for getting the things work out. Okay. See, when we keep a standard also, we should know the people should attain that one. Attain is nothing but output should be there. Simply we can't say that 5 product, 5 hours and 1 kg of 1 kg of raw material. We can't keep like that target to them. Okay. That has to be done before practically. Means I will sit, I'll take 1 kg of raw material, proper quantity, quality, everything we will check. We'll manufacture. How many units can be manufactured in 1 kg? 5 units without any wastage. Okay. And how many time I took to manufacture that 5 unit? 5 hours. Okay. You should practically perform that before, and we have to calculate everything. Then only you have to set that as a standard. Without performing before, if you tell them to do, definitely there will be a problem. Chances of what to say, delay, wastage, quantity may come, quality may go. Okay. So the standard what you are fixing, that standard should be attainable. Okay, we should achieve it. It's not like impossible. We can't tell them to do. Okay. So the standard should be attainable standard. Okay.